Hello, welcome back. My name is Oluwale Distinct. I'm a life license advisor in about 8 different provinces, and I'm also a credit risk education manager, helping people get the needed funding for their business. Today, we're going to be talking about something very pivotal concerning your financial life, okay? And we're going to be talking about 5 must-have questions that must be answered. 5 questions that must be answered, right? Before you think about anything called asset protection or insurance. There are 5 main questions that you have to answer, and so that's what's going to be uh, our discussion today. And I want you to really pay rapt attention. If you can take some notes, take some note. Okay. Now, in no particular order, these are the 5 things that I want to talk about, and I'm going to break them down and then give you examples, numerical examples. Okay. Number one is debts. Debts, debts. What is your total outstanding debt that you have as at today? Now, when looking at this particular question, right, you also want to take cognizance of the limit that you have for your debt. So things like what's your credit card limit and what is the outstanding balance on your credit card. You want to factor that in. Okay, what's your line of credit outstanding balance? Do you have student loans? Do you have car loans? All these questions must be answered before you think about anything insurance, because you want to avoid a particular trap in the insurance industry. You want to avoid being over-insured, dashing insurance companies your money, all right, when you don't need the actual coverage. So you want to avoid that trap of being over-insured. You also want to avoid the second trap of being underinsured. You want to stay in the middle and you want to be adequately insured, all right, per time. And then from time to time, based on your circumstances, you can change things. So you want to ask the first question: what is my total outstanding debt and the credit limits that I have? Those are the things that we want to have protection for. Number two, you also want to answer this question: how much is my gross annual income? Now, this figure includes both active income and passive income. So passive income, maybe things that you get from your side hustle, or maybe things that you don't necessarily work actively but you still get income from. I'm not talking about windfall income or somebody gifted you money, right? I'm talking about something that is directly tied to your work. Okay, so we want to know what is your total gross annual income for that year. The reason why this question is important is this: if anything were to happen to you today in your family members or your loved ones would immediately miss the income that you are bringing to the family. 50,000, 80,000, 100,000, 200,000 dollars. That income will be immediately missed in the family, and that gap will be there. So we want to replace that income by a number of years. Okay, so you need to answer that question, and we're going to incorporate it in the calculation of our financial needs, so you know exactly how much you need in terms of coverage. Question number three: what is my mortgage outstanding balance? Mortgage, as we know, is for your house, right? It's the single largest financial obligation commitment you may have to make in your lifetime, right? You want to know what is the outstanding amount. There have been issues of people, their husband or their wife passes away, and only for the spouse to find out that they are in serious debt and they can't afford to pay the mortgage. So you want to also plan for that. What is the total outstanding mortgage? And the reason this is also good is because the money that comes from life insurance, okay, bypasses creditors and bypasses probate, especially when it's personal life insurance. So it's somewhat better than mortgage insurance that you get from the bank, because mortgage, if you have a mortgage insurance, it is the outstanding loan once you pass away, the outstanding loan balance that will be paid by the insurance company to the lender. But once you have a life insurance, whether term or permanent, the total amount that you've been insured for will be given to your direct listed beneficiaries. Number four is you want to plan for your kids, and under that you want to consider 2 things. Number one, what is the education expenses for my children from now until they become young adults? Okay. And number two, what is the childcare expenses involved in raising these kids? So if you have 2 kids, you have to plan for those 2 kids. What is the cost of education until they graduate, whether to BSc, MSc, or PhD level, whatever plan you have for them? Or what is the childcare cost? How much does it really take if I'm not around? that my child or my children need to survive. Okay, now this is beyond I have RESP plan, I have RDSP plan. No, because if you pass away today, all those your RESP plan or RDSP plan will be empty. Nobody's going to contribute to it. So you need to make these plans. Okay, and the fifth question that is also very critical is, do I have any existing insurance at all? Whether you have it from a group life plan with your lender, with your employer. Maybe you have a group life plan with them. You want to be aware what exactly is the amount. Most people don't even know that the amount of coverage that they have. Sometimes it could be times 1 or times 2 or times 3 in some cases, very unique cases, if you are really a top person in your organization, of your gross annual salary. So once you have the answers to these 5 questions, we can then narrow down to the exact insurance need that you need, okay, so that you are not dashing insurance company and you're also not leaving debts for your beneficiaries. Now, having said all this, let's now take it into numerical value. So let's take a young lady, a young married woman, okay, who has 2 kids, and let's break it down, then do some serious. So let's assume that this woman has a car loan, right? She has a car loan, she has a student loan, okay, and she has maybe some credit card balance. So let's assume that her student loan is $30,000. Let's assume that her car loan is $40,000, and let's assume that maybe she has some credit card balance or limits, and maybe that figure is also $10,000. So in terms of debt that she has about $80,000 in debt, and this is pretty normal for people in Canada or even in North American space, right? Now, number 2, let's assume that her annual salary that she earns from an active job is $80,000, okay? And let's assume also that maybe she does some side hustles, and passively or indirectly she also earns around like $20,000. So her total income in a year is $100,000. Now, in terms of standard, we should multiply that figure, that annual income, by 20. So 20 means the number of years we want to replace that income. But let's even be very conservative and say we multiply it by 10 years. Okay, so if you flow with me, this will be 80,000 plus 20,000, 100,000. 100,000 times 10 years, that would be $1 million. Okay, now the first thing we calculated was our debt. We said the total is 80,000. Now our income, we want to replace our income by number of years. We said that is 1 million. So that's $1 million and 80,000. All right, now the third example was, what is the total outstanding mortgage that she has? Let's assume in this case, and pick a round figure, that the outstanding balance on our mortgage is $500,000. So we have 80,000, we have 1 million, and now we have 500,000. So our insurance need, based on these 3 things we've said now, is $1.58 million. Now let's assume that she has 2 kids. Okay, one of the child is 10 years old and the other child is 8 years old. Okay, now in calculating basic analysis, basic model for childcare cost or childcare expenses, let's assume that the amount needed to take care of a child is $5,000 a year. Of course, this will be more, but let's just take that figure, $5,000 a year. Okay, now the child that is 8 years old has 10 more years until he or she becomes a young adult, right? So we say, okay, $5,000 times 10 years, that would be $50,000. The other one that is 10 years has 8 more years to become an adult. So that will be $5,000 times 8 years, that will be $40,000. So if you add 50,000 plus 40,000, that's another 90,000. Okay, so remember we are at 1.58. Now we have another $90,000. Okay, now let's also assume, in terms of education expenses, you want your children to do BSc, MSc, PhD, whatever, right? Tuition fees, accommodation costs, all those things together. Let's just assume for the 2 children will cost an average of, let's say, $50,000 each. Okay, during their time in the university. So that's 50,000 plus 50,000, that is $100,000. Okay, so 80,000, 1 million, 500,000, another 80,000, another 90,000, sorry, and another 100,000. Okay, now let's assume also that the 5th question, that from your place of work where you earn approximately $80,000 actively, you have a group life plan there. Okay, and from the group life plan, let's assume that your coverage is times 200% of your gross annual salary. Okay, that will give us approximately That's $80,000 times 2. That is $160,000. So that means all the figures that we've added, right? We're going to take out $160,000 from that figure. Okay. Once we take out $160,000 from that figure, that's $80,000 times 2. So we've added all the debts, 80,000, right, plus $1 million, plus 500,000 for the mortgage, plus 90,000, and plus 100,000, and we're also now subtracting about $160,000 from it, right? I wrote in my book here, the total insurance need for this family will now be approximately about $1.63 million. That is supposed to be your financial need. Right? What we've done now is a financial need analysis. So that's supposed to be your financial need. That allows us derive exactly how much is the insurance coverage that you need based on your circumstances now. So we don't. So when somebody, my clients come to me and say, you know what, I need a $500,000 coverage. I need a $3 million coverage. As a financial advisor, it's my job and my duty to diagnose what their situation is, just like a medical doctor will do, and give them the correct prescription. So someone doesn't tell me I have malaria and then I just give the person malaria drug, or I have fever and I just give you a fever drug, right? I have to be sure that that's what you have. So I diagnose, I ask all these questions, I get that my answer, we arrive at a figure, and we know this is the figure that we need to protect you for. Now, does it mean that if you don't have the finances to support that, you must hit? You absolutely don't have to do it. Whatever you can do, at least get to that figure. Then you know this is the shortfall that you have, and you are aware of your circumstances. Okay? Now, one last thing that's also very critical before you also take insurance, right, is to ask yourself this question. What exactly is the reason you are taking insurance, apart from the fact that you are protecting your loved ones? Do you want to build wealth with it? Do you want it to supplement your retirement lifestyle in the future? Then another figure comes to mind. How much exactly would I need in this country of Canada once I retire at the age of 65, 66, 67? How much do I want in monthly passive income or retirement income? That figure that you have in mind, we then also have to plan towards it, and that will, that's going to be another whole deeper conversation, right? But I'm sure that, and I hope that you've enjoyed this short video that I've made. You need to answer 5 basic questions before you arrive at your financial need, and be aware, right? Number 1 is, what is your total outstanding debt? Number 2, what's your gross annual income? I want to replace it by a number of years. Number 3, what's your total outstanding mortgage? Okay. Number 4, concerning your children, what is the education expenses and what is the child care cost? And number 5, do I have any pending or existing insurance at all? Group life plan, temporary insurance. We pick all these figures together, you shake them together, then you arrive at a very clear figure that you need. I hope I've been able to give somebody some very valid information today. If you need any information, you want a personal analysis or personal diagnosis of your circumstances, please reach out to me, send me a DM, and I'll be happy to assist you. Thank you very much, and have a great day.